Most people build their financial life on a simple expectation that their income will always be there. It's the money that pays off student loans, supports families, funds retirement, and allows professionals to grow into the lives they've worked so hard to create. But the truth is, your income is your most important financial asset, and one most people fail to protect properly. Today's episode is all about making disability insurance simple, clear, and understandable, even if you know nothing about it. And there's no better guest for that job than Mike Cogdall, one of the most respected disability insurance educators in the country. Over his decades long career, Mike has helped thousands of people protect their paychecks so they can weather the unexpected and stay on track with their goals. He is a company carrier side authority whose perspective informs how buyers should think about disability insurance. In this episode, he's going to explain how companies see risk and why buyers misunderstand it. Mike, welcome to the podcast.
Well, Jamie, thanks for having me. It's been a long time. I was just trying to think here how long we've known one another, and I think that I'm getting so
I
old I
think
can't
it's been
remember.
since 1995.
What,
So 20,
30,
31 years. Yes.
31 years,
Yes. A
and
long
we're not the
time.
same age, as you well know, right?
Still
Uh,
feel that way. Yeah.
yeah, I still feel that way as well. 31
Yeah.
years. Yeah.
So let's kind of start out with just the basics. So when somebody first hears the term disability insurance, explain it in very simple terms. What is disability insurance?
It's two different things. Or it's the same thing, but it's paycheck insurance or it's income protection. Why we use the term disability insurance, Jamie's beyond me. We sell life insurance. We don't sell death insurance. And you've heard all of these before. It's almost a misnomer to say disability insurance like it's expected, because I think as a consumer, what happens is the first thing you think about when you hear the word disability or disability insurance is you think of Social Security and what I call the blue sign syndrome. And that's all the good parking spots at super targets everywhere in the country that are the blue ones in front. That's the way people perceive disability. So there's this disability insurance, but it's really income protection. And it's just as simple as that. The most valuable asset, as you just alluded to, is your ability to earn an income. I once was told by a guy, if you don't like money, just try living without it. And that's not to be flippant. It's just a fact. I mean, this is how we all survive. And so unless you are a silver spoon and never have to worry about a dime in your life, there are not very many people like that, then this probably should be the most important insurance that you could ever own. As I always say to people, Jamie, and this is funny. I like to do things in order, and I've always told people, I said, if you do things in order, everybody does. You try to have a little bit of an orderly life, but we do live in some chaos. But I pose the simplest question. If you want to do something in order, I always ask the question to a lot of people, and they think I'm a smart aleck, but it's like, when was the last time somebody died and then got sick? We know how things happen in life. And that's just the reality of this world we live in. And, nobody wants to think about it, but it is just a harsh reality that, there's my daughters, as you know, were recently in an accident, and they were fine and everybody was fine. The car was totaled. So I looked it up on AI to try to explain to my daughter what happens. There's 16,000 accidents, car accidents a day in the
Yes.
United States of America alone. And that the most valuable thing that you can have is not the car, but it's the contents of the car, which can be you, your family, whoever's with you, but you, the driver. You could be in one of those and it could change life forever. So, how can income just not be regarded as the most important thing that you could ever have?
So, I mean, obviously, you and I understand the value of it and why it is so important. And it's hard for me to fathom why somebody would go unprotected. But why do you think it's so overlooked? Why do you think most people don't realize it and want to protect their income? Why is it so
I,
overlooked?
you know what? I don't really think that it's as much overlooked. One, if you're really young, you're invincible. You and I both know that. Why at 25 do I even have to think about that? It's just not a concern of mine. And, at any age, at any time, anything can happen to anybody. But I really think one of the biggest issues, and thank you for this podcast, is lack of awareness. You're like I just said, you use the word disability income, and it's just kind of a flippant statement that nobody pays attention to. So there's really not an awareness from the general public to buy disability insurance. And if I can give you an analogy, I just did one the other day. Um, 30 to 40% of all phones in use in the United States of America are insured.
Mm-hmm.
On an individual disability insurance basis, not counting group insurance for carriers. So if you own individually, because we both know that oftentimes, even if you have group insurance, you should have a supplement policy for yourself. And the beautiful thing about that is it doesn't really cost you very much money at all because somebody's taking care of around 60% of your income already. It may be just up to salary, but somebody's taking care of a piece of that. But there's always room for you to get more because in the event you're hurt or sick, oftentimes expenses do not go down, they go up.
Mm-hmm.
So I just really think lack of awareness is one of the biggest issues we have, getting the word out. When I started, gosh, Jamie, whatever year, 1987, there was over 100 carriers in disability insurance. You and I now today can count on one hand and maybe one more finger, five or
Mm-hmm.
six carriers that are left in this space. So it's just, I really think it's lack of awareness. They just
Yeah, I
don't
mean,
realize.
I use that same analogy. I mean, everybody goes and buys an Apple iPhone and they immediately get Apple Care. When the reality is if the phone breaks, they probably could replace it. They don't necessarily even need to insure it. But most people don't think about the potential income that they have that they can't self-insure. Like there's such a disproportion.
Well, the disproportion is exactly correct. If you spend $30 a month on a $900 phone, we just had that, and 30-40% of all phones in use have the insurance. It turns out that only somewhere between 2 and 4 on a rough estimate, 2 and 4% of the US population, workforce population, so it doesn't count retirees and it doesn't count children, workforce population own individual disability insurance. 2 to 4%.
That's crazy. And it is crazy because, if you were to calculate how much your value is, your income potential between day one till retirement, it's multi millions. And if anybody purchased something that was that valuable, the first thing they would do is insure it. So it's mind-boggling that they don't even think about insuring something so valuable.
No, I agree 100%. And it's not the most complicated insurance in the world. I mean, the
Mm-hmm.
policies are written, and you know this, you've done this for so long. They're written very well. So the basic questions that people would ask is who decides if I'm disabled? Well, the answer is easy. It's your physician. It's not workman's compensation by any stretch of the imagination. It's not getting hurt at work and collecting a benefit from workman's compensation. It doesn't work that way. It's in the event you get hurt or sick and you can't go to work, you visit your physician, and then I always tell people there's only four things you really, really need to know until you get into the weeds a little bit on disability insurance. And that's when it starts. That's the elimination period, just like a health insurance deductible, right? $200 deductible, $1,000 deductible. The elimination period for disability is just the number of days you self-insure. So the deductible is the number of days, i.e., 60 days of deductibility on the 90th day because you don't get paid the 61st day. You get paid just like a paycheck monthly. You'll get a check on day 91 for being hurt or sick and unable to work. That's one, the elimination period. You know, when it starts is easy. That's the elimination period. How long it lasts, there's various benefit periods, as you and I both know. 5 years, 10 years. It depends on the carrier, to age 65, to age 67, and 70 pretty much are the ones that are the norm.
Mm-hmm.
And I'll ask you, what would you say most people buy today when it comes to a benefit period?
I'd say the majority of my clients, again, if they're under the age of 40 or 45 when they're buying, 90-day waiting period to age 65. If you're in your 50s, people typically just get a 5 or 10 year benefit
Correct. And I agree with that totally.
just
So
to
you,
keep it, just to keep it affordable or to keep the cost appropriate.
and even before we go farther there, when you think about uh, on an average, 2.5% of your gross income might be the cost of a disability insurance contract. Um, that's just anybody can do the math. That's not too bad to cover around 75% because if you're buying it yourself, people forget the benefit will be income tax free.
Mm-hmm.
And so they forget that too. So it really covers the vast majority of your earnings. So you've got an elimination period, you've got a benefit period, you've got a benefit amount, right? And
Mm-hmm.
that's pretty easy too. It's determined, and you can explain this better than I, but it's determined on how much money you make. So on average, let's say you make $10,000 a month, $120,000 a year back at you. About how much would somebody be eligible for on a tax free basis?
So for somebody making 100, let's call it 100,000, you can get about 5,000 a month of benefit,
Correct.
tax free. But if you're making 100, you're really taking home 65, 70,000. So yeah, so you can usually insure between 70 and 80% of your take home pay. And then
Correct.
depending on your age and your gender, it'll cost between 1 and 3%. More
Yeah, very
expensive
well
if you're
put.
female, less expensive if you're male, more expensive if you're older.
And
So,
we should also note that the younger you are, the less expensive it is, and those rates are locked forever. It's a
mhm,
guaranteed contract, not a promise contract. And there's nothing wrong with group insurance, but group insurances are like almost like a promise to pay because there's a lot more moving parts. This is guaranteed. You own your monthly benefit. That $5,000 for that stated premium, you're the only one that can change that.
mhm,
If you want to increase the coverage, you can do that, provided that you're insurable. But there's also riders that can protect you from that. And if you want to reduce the benefit, you can do that. If you want to
mhm,
keep it exactly the same for $55 a month or $80 a month, you can do that until the day you retire, and nothing
yeah,
ever has to change. And then the last thing people are concerned about, or really need to know, not concerned, is how much does it cost? And we just touched on that briefly. It's around 1 to 3% of your income annually.
mhm,
And so it's not, if you think about this insurance as a cost per hundred of insurance. So how much, does it cost to buy $100 or $1,000 unit of this insurance or whatever? And you look at a lot of other insurances to include that mobile phone that we started
mhm,
like talking about earlier, the cost per hundred or the cost per thousand, that's your monthly benefit on this insurance, is significantly less than people realize if they just take a couple of minutes to look and see, this is what I'm protecting. Because as you said, we don't know how long anybody could be hurt or sick. We never want anybody to be hurt or sick, but that's not the way the world spins. So you just do not know how long it could be. And if you're 35 and you're going to 65, that's 30 years.
mhm.
30 years at $100,000 is 3 million bucks. If
Yeah.
my
And I
math is
have
correct.
some clients that have gone on claim in their 30s that are never going back to work, and they're going to get paid for 30 years with cost of living and everything else. They've got some pretty significant claims. So it does happen.
So fundamentally, when you're out looking and asking, those are the primary questions I think that somebody needs to understand: when it starts, how long it lasts, what they get, and what it will cost. It's a
Mhm.
very good place to start. The rest of it can be explained as you go forward. And then really backing up a little bit is understanding why it's a good idea to have it. And the younger
Mhm.
you get it, the better it is. And we could talk about that for a couple of minutes.
Yeah. So, I mean, so what's interesting is when you're young, it's less expensive. You lock it in, you're likely to be healthier. So you're going to have less exclusions or anything. But it seems like when people are younger, they're less likely to get a policy because they don't think that it's going to happen to them. So it's almost ironic. So when people come to me in their 50s and they say, "Oh my, I really need to get this. My spouse just had a stroke or this coworker got into an accident," they realize the reality because they've seen a lot of things. But then when you go to buy it in your 50s, it's really expensive because by then, chances are you've had some kind of diagnoses.
Right, right. And I always tell everybody, those the people that like the movies and remember the movies, is Benjamin Button is just a movie. You're not born old to get younger as you go through life. And I always have I say a lot of things, as you well know, to people, but it's the simplest things to understand is the last thing you want is your next visit to a physician for any reason in the world to walk out of there and be uninsurable.
Mm-hmm.
And that can happen at any time. Your next visit could be the last time you're insurable. So when you're young and you're 28, 29, 30, 31 years old, even 40s and under, it's a great time to start to think about the importance of you, your family, and what would happen if something did cause you to not be able to work. And a lot of people think it's accidents. And you and I know that's not the case either.
Yeah.
Almost most disabilities are some form of diagnosis. And I always like to give stories. My friend who's an orthopedic surgeon in my neighborhood, great guy, I've been to him, saw him 5 days ago, Parkinson's.
Oh, no. That's
Yes, ma'am,
terrible.
51
Yeah.
years old. He's a doctor, by the way, so he understands exactly
Yeah.
what the nature of it is. It's really hard to be an orthopedic surgeon and be diagnosed with Parkinson's disease.
They may not let you too because there's a risk.
Yeah, this I don't even know. I would say
Yeah.
probably not. I'm again, I'm not medical malpractice insurance. I know nothing about it really, but I would say it's going to be difficult to work. Plus, he's just got a whole ton of things to navigate right now when you get
Yeah.
a diagnosis like that. With one child in high school and two in college, one in grad school
Wow.
and the other one junior in college. This is what
So
happens just
yeah,
out of the
so go
blue.
back to the you're using the term insurable. So some people may not know what that means, insurable. So go back to what that is and how the company looks at your application through an insurability lens.
Well, let's start with the easy one. Generally good health. Generally good health. No, and I will say major diagnoses, there's a lot of them. Like even myself at my age today, get a physical every year. I'm in generally good health. I mean, I don't mind being open. I take 1 5 milligram for some blood pressure thing to keep it under control. That's all I take. Um, Insurability really can come down to anything a from a carrier perspective. If there is something that isn't right, gosh, give me an example and I'll help you here.
Well, I'm seeing a lot of insurability with people taking ADHD meds, antidepressants. That seems to be pretty common, even for people that are younger. So maybe talk about how that impacts
Yeah, and you know what?
everything.
That's a great place to start because that's again pretty high on the actual claims list from carriers' perspectives. Milliman does studies and shows that this is not uncommon. 10, 15 years ago, just to give you a little history, you know this. If we had somebody that was on any type of med, any for any type of mental nervous, anything, automatic decline.
Yes.
But as time has gone on, we've understood one, medicines get better, diagnosis get better, everything seems to improve over time. People now they catch cancer early, they've got a great shot of surviving the long haul. Same thing with mental nervous, you get it controlled. So in that example, you're still insurable, fully insurable, but they may exclude or give you a mental nervous exclusion, or they may limit it to 2 years. Let's say that you are Lindsey Vaughn. I love to use examples that we
Yeah.
all are aware of if you follow the Olympics at all. Her leg is not insurable anymore.
No, no.
No, she's 41 years old and her leg would not be insurable. It's
Even if
just
she
like,
now retrains and she's going to become a teacher, let's say, they would
correct.
not cover that leg. Yes.
No, I mean, it's just had way too many issues.
Well, and it's also the recency. So if you go and apply
Correct.
right after she just had 4 surgeries, if you go and apply right after something happens, there's no way they're going to cover that.
No, because and those are good examples. And we'll shoot another one. Hodgkin's disease at age 30 that you survived and you're 10 years out and you're now 40. They'll look at that very differently. So for certain diseases and some things that can be chronic, the amount of time that passes, it can either get more significant or less. If it gets less, you're probably going to be getting a decent policy. What I mean by decent is not a lot of exclusions. If I had orthoscopic surgery, excuse me, at junior year in college playing football, and 6 years later I'm deciding to buy income protection, if I had no residuals of that, you would be standard. What I mean by standard is you would have no exclusions whatsoever. The carrier's goals are really to do the best job they possibly can, but not to take on what's known as a pre-existing condition.
Mm-hmm.
And there are some that are hard, colitis, lupus, things that people just, you know, MS, sometimes it's
Yeah, we've seen a
diabetes
lot of
type
people with
1,
Crohn's. Yeah,
Crohn's disease.
yeah.
Those can get
Diabetes. Yeah.
they can get a lot more difficult, and they're in the carriers that are still here are really working hard. And there are carriers that will still, as you and I, they're working hard to improve this, but there are carriers that actually work in that market as well. They just do a policy that's somewhat different, but it still can be a really good policy too, as you and I both know, because we work together and we've done a lot of those too. So you
Yeah.
shouldn't let that prevent you from trying to get insurance,
Yeah.
income protection. You shouldn't let that stop you. Like I said, if you've got controlled high blood pressure and you're at 120 over a 72 for 5 years, they're really not looking at things
Yeah.
like
And a
that.
lot of people, I think, also confuse the risk for life insurance and disability insurance. So, heart stuff, if you're a little overweight, those types of things typically don't impact disability insurance. They might impact life insurance, but not disability insurance. So, that's something. And then the other thing that I think is interesting is a lot of people, they want to go and try some sports or some kind of really high risk activities. So, if you have your policy prior to doing all of those things, that's going to be covered. If you started doing scuba diving and jumping out of airplanes and want to go apply, that's not going to be covered.
Well, even in that regard, you know what, like with scuba diving, I was a scuba diver and still had a policy and I was covered. But if you're not a deep water diver and, if you do the once or twice a year, you're in Hawaii and you go on a one float dive, the carrier is not, and you just hit the nail on the head. If you're living where you live in beautiful Colorado where the mountains are and you are a free climber for rocks,
Oh, yeah.
no,
No.
they're not going to cover it. They're just
Mm-hmm.
not going to cover free climbing rocks, rock climbing. Think about hazardous sports like that. And it just depends. Some people say I climb when they really hike. So you've got to kind of like,
Yeah.
you don't need to brag about what you do, for lack of a better term, but it's okay. But you should still be honest and totally open about what you do.
Yeah.
Skiing is not a problem, as you well know.
They don't even ask about
They
skiing
don't
or
even ask
cycling.
about like skiing, which can be, I've been skiing my whole life and I've seen an awful lot of people come down the hill
Yep. Same
vertical
with
on a sled.
cycling. They don't ask about that. I've seen a lot of cycling injuries.
No, a lot of
So,
cycling
but
injuries.
again, if you get your policy before you do any of these things, it's all going to be covered because they
Oh,
can't
there's
add
no
something
changing,
later.
right? And that's a very good point you just made. The policy is underwritten, not at time of claim. The policy is underwritten at time of application. So
Mm-hmm.
once it's done and it's in force, it's as I always say, it's golden.
Mm-hmm.
You could
And
do
it's
all
grandfathered, so they
correct.
can't. Yeah.
You could do all kinds of things. You could be 26 and become a world-class rock climber at 31, and that no longer matters. They underwrote you at time of application, not time of claim. And I think that sometimes people will confuse that a little bit. It's like, oh, if I file a claim and I broke my leg doing this or doing that, what are they going to do? How are they going to get out of paying me? That's not the case with these contracts. They are written very strongly. They really are. I mean, these contracts, they're not complicated, but what they are is they're, for lack of a better term, speaking of rocks, they're rock solid.
Mm-hmm.
In the event you get hurt or sick and you can't go to work and time is going to pass, as I've always said, you have a legitimate claim, you will get a legitimate check. You will get paid. You meet the
Mm-hmm.
definitions of disability, which are very broad, meaning, or very narrow, depending on what lens you're looking through. But there are definitions that will cover you in your occupation, unable to perform the substantial and material duties of your occupation. Some say and not engaged in another occupation by choice. Some say it doesn't even matter. If you cannot be an orthopedic surgeon, for example, and you know this as well as I do, better than I do, and suddenly you thought you were an expert chainsaw guy and you accidentally somehow by the cut off two fingers on your left hand and you're a left-handed surgeon, you may not ever be an orthopedic again because
Mm-hmm.
you can't hold a scalpel, but you
So
could do
maybe
something
describe
else.
what, because you use the term own occupation. So maybe somebody who's not familiar with that, they've heard the term. Why is own occupation so critical in a disability policy, in an individual policy?
Well, again, it's not workman's comp, right? So you're paying, you get what you pay for. So let's say, use me as an example. I'm an insurance guy. So I don't know what could disable me, and that's oftentimes what you hear. Well, what could possibly disable me? What a lot of things could. Again, own occupation means you're covered in your specific job, like unable to perform substantial material duties of your occupation. So if I could no longer do this, let's say that I had a stroke and had a hard time speaking because the left side of my face, I like to use examples. Left side of my face is completely paralyzed. And I
Mm-hmm.
already know I talk pretty fast, but let's say that the left side of my face, and I talk really, really slow and strange, and it's hard for people to understand me. And I actually had a lawyer that had this happen in Virginia, where he was only 41 years old and had a stroke. He's going to live a very long time, but he
Mm-hmm.
had no clients because he couldn't really communicate with clients. He couldn't go into a courtroom anymore. He couldn't do those things because people couldn't understand him. They said, this guy talks and he slurs and you can't understand a word. He spent all his time, energy, and money going through law school, passing the bar, becoming a lawyer, becoming a partner at a young age. And boom, it was all taken away.
Yeah.
I met him at a golf course, and to this day, the only thing that we talked about for briefly, because he knew what I did for a living, I met him through a friend, was from now until age 65. So he's probably still getting paid. He had an individual disability insurance policy that pays him,
Mm-hmm.
and he had done a couple of things on the side too. I call them
Yeah. And
side
so
hustles.
talk about that. So he can't work as an attorney, but let's say, I mean, he could probably do things from his computer that don't require a voice. He could do research. He could, do consulting work by typing. Would he explain how that would be impacted with an own occupation
With
contract?
own occupation, it becomes fairly simple. Is how do you earn your money?
Mm-hmm.
And if you're an attorney and you're a litigator, you know how you earn your money. You may still be able to do it in a lot of ways, but there are ways that it can be taken away from you. And if it's taken away, then you legitimately have a claim. You could go be a researcher, but then you end up almost like a law clerk.
Mm-hmm.
You're no longer an attorney. Whether you keep your JD, if you can't do your profession, you're covered.
Mm-hmm.
I always tell people it's like an orthopedic surgeon, and I use those because they're easiest example I can give. An orthopedic surgeon, I say, has three phases to their job. They diagnose you, they cut you, fix you, and then they see you for the rehab and send you off to the rehab people and check to make sure you're okay. I just went through this with carpal tunnel, so I know exactly how
Yeah.
it works. I'm not going to you, Jamie, as an orthopedic surgeon, if you're not going to perform my surgery. I may go for a
Yeah.
second opinion, but I'm going, whoever I'm finally consulting with is the one that's going to do the surgery. I don't ask you to do it to have somebody else do it instead. That would
Yes.
seem a little
Yes.
odd. So think about those three phases. If you can't do the middle phase,
Then you're done.
then you're done. You may still be able to do something in medicine. You may still be able to go
I've
do,
had people retrain and do psychiatry or
yeah, you could
radiology or
retrain. There's a lot of things you could do. There are people that go
yeah.
and teach, as a matter of
Yeah.
fact.
Yeah. I've
I
had
just met one
people.
that
Yeah.
went to the University of Arizona to teach. Um, that's a really good example, but can't do the specifics of their job anymore.
Mm-hmm.
And they stay on
But the
claim.
benefit of the own occupation, you also don't have the company saying, we think you're capable of doing this.
Yeah,
And
that's
that could be the risk of a group policy. So explain how the difference between, let's say the orthopedic surgeon has the individual policy, and then they also have a policy through their employer.
well, there's a difference in price on group and individual, and people always ask, well, what's the difference? Well, a group policy is designed to get you back to work as quickly as they possibly can, even make accommodations if they can, do all the right things. Because if the employer is paying for your policy, right? So it's a group policy, the employer is paying for everybody. That's good for the employer, but it's also good for the employer to figure out how to get you back to work as quickly as they can. Because if they have a whole bunch of people, it just makes sense. It's the law of numbers. A whole bunch of people go out on claim. The next time they go to get a group insurance policy or renew it, the price will
Yeah.
go up.
Mm-hmm.
Or they'll have to go find another carrier or all of those types of things. This policy is you and you alone. And
And
that's
then
why I
a
always,
lot of those group policies, like in that case, they might say you have to be totally disabled, not
uh,
capable of being gainfully employed. So again, he's, has carpal tunnel or Parkinson's and he can't work. They might say, well, you're well educated. We're going to have you do some office work. We're going to have you, or whatever it might be. And then they don't have to pay the claim.
and that's a very good point. There's a lot of moving parts to it's like apples and oranges. They're both fruit. Okay, that's fine. That's kind of like talking about group and individual. A group may require consecutive days of disability.
Mm-hmm.
And there are oftentimes, let's say if you're cancer, you're not consecutively disabled every single day. What if you go to chemo and you're in and out and then you go back to work for 3 weeks? And I know lots of people because I've
Yeah.
been around for a while that do this. If they don't ever quite get it satisfied, to actually go for benefits. With you have to apply typically for Social Security benefits
Mm-hmm.
with your group disability. An individual contract is something that you and I've said this twice now, you and you alone own. It's
Yeah.
guarantees,
Yeah.
and they're very well written. which
Yeah.
is, I think people are suspect. And, because you've done this for so long and you're preeminent expert in the world of income protection, what people should and shouldn't have. When people say, well, what kind of policies should I get? Well, you already know the answer because you're the kind of person that says, listen, I know that you're an ophthalmologist. I will get you the best policy available in the market for an ophthalmologist. And you know exactly what they need and what to get. There might be a couple of little nuances or moving parts that you want to do, uh, cost of livings or something like that. And those aren't important today, but you're the preeminent expert that knows exactly. You've seen every occupation that there is.
Mm-hmm.
Every occupation that there is. This I know because I've worked with you for so many years and we've gone from some of the most complicated physicians that they have titles I don't even really understand sometimes, neural something, something,
I
pediatrics,
think I had
this.
somebody who works with astronauts or yeah, I've had some
And,
pretty,
and,
yeah.
and then, we recently just, started working with a truck driver. So
Yeah.
it runs the gamut,
Yeah.
but everybody's covered in similar ways.
Yeah.
They're covered with this individual contract.
Exactly. All right. We're going to take a break. Let me just look at 43. All right. We're going to take a quick break. And when we come back, Mike Cogdall is going to explain what insurance carriers actually see when disability claims are filed and where people most often discover that their assumptions were wrong. Stay with us. All right. Welcome back. We're here with Mike Cogdall, and we're talking about disability insurance from the carrier perspective and how risk is evaluated and what happens when coverage is tested by real life. So when somebody early in their career asks for coverage, what is the long-term risk that the carrier is going to look at? So again, somebody's applying, they're 30 years old. This is the only time they have a chance to medically underwrite somebody. What are they going to look at? What are the primary things?
In today's world, your basic overall health is really what they're looking at. They really are just looking at your basic overall health, your earnings,
Mhm.
um, how long you've been in a certain profession. Sometimes it depends professions, because if you've only been a real estate agent, you and I just had this example for
Yes.
1 year or 2 years, one carrier may not want that risk, another carrier may. But what they're really looking at is, what kind of risk are you? And we've already talked about, if you're doing all kinds of crazy things in the world of sports, you're a much greater risk than you are, than somebody that does not do things like that. But health is really the driver. And generally, good health leads to no problems. If I may, when I started, and I don't have to tell you what year, but I don't mind. When I started in 1987 doing individual disability insurance, working for Provident Life and Accident, because yes, I was with carriers for years. I'm not a claims expert. I never paid claims, but I've worked with claims heads, heads of claim, people that pay claims. Um, what they're really looking for is, it's almost like an algorithm. Yeah, it's okay. This is our pool of people. We have this many neurosurgeons. They can look at the past and have some idea of where, just like life insurance, right? We both know that. They have a life expectancy of 84 years females, 79 years for men, whatever the numbers are. So they start to base it there. The same for a 31-year-old salesperson. You really don't have to go through an awful lot to get the insurance. You answer basic health questions. If there's nothing wrong with you, you know what an intending physician statement is. They may order a record. Let's say that you did have surgery. They want to order the record to just make sure that you're still clean. Um, but in today's world, I call them mini exams, and you're very familiar with this after
Mm-hmm.
in your long career so far. Mini exams were like, if you were buying $2,500 of monthly benefit, they were getting what's called labs. So they were doing blood work and they were doing a mini exam, like checking your blood pressure, checking everything. In today's world, because things have changed so much, and we can talk about AI a little bit. We don't need to. They have really good data and really good numbers and really good ideas of just how your lifestyle is to figure out where you fit into the box. That's why
Mm-hmm.
they have occupation classes. They can go as high as a 6, and don't worry about carrier numbers, but they can go from a 6 to a 1, for example, 1 being the most high risk job. Likelihood of getting hurt or sick
Mm-hmm.
is greater being a construction worker with back issues, and they've seen that, so they know.
Mm-hmm.
Versus being a wildly successful financial planner,
Mm-hmm.
and they know those numbers. And it really, in today's world, they just don't look for a lot of things like they used to because it's already there.
So
Does that
maybe
make
talk,
sense?
yeah, so it does make sense. So maybe talk a little bit about, because you work with multiple companies, I work with multiple companies. And so somebody who's just starting to look at disability insurance, they may all look the same. Maybe they work with somebody that only works with one company. Maybe they work. What's the difference between the companies and the benefit of shopping around?
Oh, you should absolutely shop around. And you and I have had this discussion more than once. And the reason you should shop around is most likely, I would not personally, as a consumer of product, I would not go to somebody that what I says, where's the logo?
Mm-hmm.
What I mean by the logo, the company hat works for one company. Even if somebody says, well, I can do other carriers if I want to, I would always shop. It's in this industry, underwriters, carriers are not the exact same. It's almost like professional football teams don't play the exact same offense. Well, this is the way carriers look at things as well. One carrier may love real estate agents making over $150,000 a year, and another carrier may say, we do not want to touch them. Those are their two
Mm-hmm.
different experiences. So you should always shop around. And what you really want is somebody that can help you create an income protection plan because it's for the long haul. You
Mm-hmm.
want one to take you from 29 to 65 or 67 or whatever benefit period you ultimately buy. You want that number. Um, but there can be moving parts. You may have group insurance, you may not. You may get group insurance, you may not. You may make a wild income and want to insure way more than a carrier can do. There's just so many reasons to shop around and look. You may only get a certain benefit amount from one carrier based on various reasons, where another carrier may be able to add another. I'll make up a number. Say you had $15,000 a monthly benefit. You may be able to get another 15,000 somewhere.
Mm-hmm.
And if you're making, we'll call it $800,000 a year, you may be eligible for 25 or $30,000 a month.
Mm-hmm.
You should have the opportunity to say yes. And if you're healthy, it's just that much easier to get. And that's why I always harken back to being young,
Mm-hmm.
because I was
So
I could run marathons when I was 30 some, 40 some
yeah,
years old.
same. Yeah.
Now I can't.
Yeah.
I just can't run a marathon. I probably no, I can't. I'll
Yeah.
just leave it at that. It's too much.
So when you mentioned the person, the logo person, are there other types of red flags? So somebody's just thinking about this for the first time. Yeah, I really need to get a disability policy. How do I know I'm working with somebody that's got my best interest in mind? Or what are red flags or things that people ought to be careful of?
You just mentioned the first one is somebody's only showing you one carrier. I would consider that a red flag. And don't make price the issue, by the way. If we're looking at a carrier, you should probably look, and I've always said this, you should probably look at three, ABC, at least three. And the carriers, this better than I, are very similar in nature. They
Mm-hmm.
just have idiosyncrasies. Again, just like professional football teams do things differently. They're very different in certain ways they do business. But you should look at three carriers and rely on an expert, somebody that does this for a living. Like, for example, you specifically do this.
Mm-hmm.
This is what you do. Since I've known you, this is what you do. And we just said 31 years. You, you need to look for people that, one, they'll have your best interest in mind, because if somebody shows you a quote that's $40, $50, and $60, the client may say, I want the $40 quote, correct?
Mm-hmm.
But an expert may say, you know what? I'm more comfortable with the $50 one, and here's why. And then you, as the expert, you get to explain to them. They can still make their own decision, but this is why this one I think is better suited for you. There is
Mm-hmm.
no really bad. I say the worst disability insurance you can have is not having it at all.
Yeah.
That
I mean,
that
I
you
sometimes people come to me and they say, well, this guy says they could do it for, $30 a month, like you said. And I'll look at it and I'll say, yeah, they have you as a male, you're female, or they have they didn't price it right, or they stripped it down with no riders. Like you're not really comparing. So the prices are set by the companies. So however, some people have access to discounts and there are some benefits of working with some experts. But again, it really makes sense to work with an expert who can spreadsheet it because,
It, and that's a very good point. So many things in our world are negotiated. These are priced per hundred policies in every single state. So if you're a three and you're 25 years old, not to make this complicated, but you're a three by the carrier standard, that's your OC class. You're a three, and it's $20 per hundred. You may have a discount there depending on if you're an association, you're with a group, you're with, your firm has individual for three or four or five people, depending on the numbers. You could get a discount, but the original number is filed at $20 and it's not negotiable. You can't change it. I can't change it. And it stays that way. Unlike a group insurance plan, those rates are negotiated because carriers are buying for somebody's company's business. They'll go, well, we can do it for 21 cents. And then someone says, but I can do it for 19. Those are very similar contracts. You just alluded to something else that's really important. There are riders on these contracts or addendums, things you can add to the contract. There are people that end up buying a total only disability contract without what we call residual. It's easier for the layperson to understand it as partial. In the event you get hurt or sick and you're only working 20 hours a week for a while, you could still be eligible for benefits.
mm-hmm.
Somebody leaves that off, you're not.
Mm-hmm.
And there are features and benefits like that available, and it takes 10 minutes to understand them. It really does.
Mm-hmm.
But you can say, I can live without that.
Mm-hmm.
I would like to have that. And somebody that just shows boilerplate, which a lot of people do, which I've spent my whole career trying to discourage. I mean, even when I worked for a single carrier, I always encouraged people to look around. As a matter of fact, if you're a high wage earner, you should probably even consider two different policies. Like if
Mm-hmm.
you're eligible for 20,000 a month, I just shoot examples I know. I would even maybe look at two $10,000 policies because if I'm
Because
really
the
hurt or sick,
aggregate benefit will be a lot more because there's limits per company.
right, there's limits per company. And you know what? There's nothing wrong with having more than one set of eyes on a claim.
Mm-hmm.
Claims have a great reputation of paying, by the way, which is what
Yes.
people talk about in our industry. It's like, well, will they ever pay? You're
It's
hard.
really rare. I mean, and I for 30 plus years, I've only had one or two that were turned down. One guy, he changed his name and fled the country. It was really sketchy. So,
Yeah,
something else was going on, but it's really rare that a claim is not paid.
no, and some carriers pay claims differently. Some are they're all judicious in making sure that they're making the proper decision in paying, but some will drag things out longer than others.
Mm-hmm.
Some will waive the fact that you need to be under the care of a physician and still pay your claim. Give you an example. If you become paralyzed and you're never going to walk again, that becomes fairly obvious. There could be a carrier that still quarterly requires you to like prove that, you know what, you're in a wheelchair, which is just, it doesn't make sense. So not all carriers are created equal. They're all good, but they
Mm-hmm.
just do things differently. And again, back to what we talked about before, certain carriers are more suited to certain occupations
Mm-hmm.
and certain job titles than other carriers. Some carriers do a much better job in what I call the blue gray collar world, which really doesn't exist anymore because we're in an electrical world and in a tech
Yeah.
world and not a mechanical
Like the
world.
truck driver guy, we did a
But
blue
the
collar
truck
type of
driver who
policy.
works,
Yeah.
6 days a
Long.
week and helps load and unload and does all kinds of things may be a completely different risk than, again, our neurosurgeon.
Yes.
And there's a different carrier for the truck driver than there is for the neurosurgeon. And it
Yeah.
makes
Now
good sense.
you mentioned negotiable. And so this is something that you've helped me with over the years when there are certain extenuating circumstances. So when somebody gets underwritten and they get an offer that they don't like, is it negotiable? Is it worth shopping around to other companies to see if they can get a better offer?
The first thing is first rely on the expert that you're dealing with, such as yourself.
Mm-hmm.
And I say that because this is something that you and I do a lot. I still got pretty strong ties to the carriers. And go back to the carrier because sometimes they've only got, and you said this 15 minutes ago, they get one look And sometimes that look is just not correct or all the information was missing. I have had, again, I love examples. I had a guy that was a triathlete, basically world class, and also a very successful businessman. And he went to a chiropractor for not adjustments. He went to a chiropractor almost for like massage
Hmm.
therapy, and they excluded his back. And of course, by the time I got done explaining and let them look this guy up and see who he was and what he really did, he didn't have an exclusion on his back anymore.
Yeah.
He
And
didn't have an
that takes
exclusion.
advocacy from the broker too,
Oh,
to
absolutely.
explain
The
it.
broker
Yeah.
has to be your advocate. It's just like
Mhm.
in-house sales. They have to be on your team 100%. You got to go until the answer is finally no, because there
Mhm.
are mistakes that are made by everybody. You know what? There are sometimes height weight issues, right? But they don't know the build of the person. They didn't take a picture. They didn't send in a.
Yeah, I've had that quite a bit where people, I had a guy who was a cop who was really built, weightlifting all the time. And they said, oh, he's overweight. He's not overweight in the same way as somebody who's obese. He
No, and you get the
just based on the
opportunity.
chart. And so after we explained it, it was fine.
Right. You
But
get the opportunity to say, you know what? Well, the BMI is within range, body mass index, because look at this human being and
mhm.
look who and what they are. And they say, okay, oftentimes just your relationship, because it's important for a good producer to have good relationships with the carriers, because
Mhm.
oftentimes they just go by a book and the book can be negotiated. Another example, if somebody is overweight, just overweight but losing weight, and they say, we're going to make a 50% rating. And what that means is instead of $100 a month in premium, we're charging you 150, but they're losing weight. We oftentimes can have the ability to go back and say, you know, we're really on the right path here. What about 25%?
Mhm.
And you and I have had that happen often
All the time. Yeah.
because that head underwriter, that person trusts everything that you and I are saying because we're not risking our reputation with the carrier to tell them something that we think is not true.
Yeah.
So
Yeah.
there is room to negotiate and there is room to look at other carriers. Oftentimes, you don't need to to apply a bunch of places. Sometimes can get a little silly, but people do it. It just,
Yeah. I usually tell people not to do that. I try to do
I
some
agree.
stuff on the front end because the carriers will know if you apply to three simultaneously, they're going to say, why are we going to put in effort if you're not even going to take the policy? We know you're applying elsewhere. So
Right.
you want to
One,
disclose if you are applying to more than one and you're planning to keep more than one.
oh, that's good.
Sometimes that is beneficial because you can say, well, this carrier didn't put an exclusion, and you can sometimes
And and
negotiate.
and that's been known to happen an awful lot as well. There's, you know, it's not like they share information, but they do share. I mean, we there are ways to find out, you know, medical information, but you get an offer back from a carrier that you don't like. First, you go back to that carrier, figure out what it is you don't like, and some things you just can't do anything about.
Yeah.
I mean, if you're going to have some kind of like exclusion that just can't be removed, it is what it is. Because then the carrier that you go to next would say, no, they were right
Yeah.
on. They were spot on. There's a
Yeah.
many things like that, which are just obvious,
Yeah.
just obvious.
Well, we make sure, like when somebody gets a back exclusion, put in except fracture and burns on the policy. And a lot of times people aren't aware of that. So, you've had back problems, but if you get into a car accident and break your back or fracture your back, it will actually be covered. And so that's something that a lot of people aren't even aware of.
And that's where your expertise comes in as well, because that's exactly correct. It's, did that pre-existing condition cause the disability? And if
Mm-hmm.
the answer is no, then they're going down the path of covering that disability. And
Yeah.
your example was perfect.
Yeah. So
No,
it's not a back strain, it was a fracture and that will be
correct,
covered. So
correct.
that needs to be relayed to the client. So to kind of summarize based on everything that we talked about, like the different myths and what to look for in a policy, what would be just your basic advice to somebody who's thinking about this for the first time?
Well, other than to call you, sorry, but really,
Yeah.
I mean, I've worked with you for 31 years.
Yeah.
Uh, we've been together a very long time. My advice would be you need to seek out somebody that does disability insurance or income protection, as I like to refer to it. I've spent years trying to get the whole carriers in the world, all the carriers in the world to change it to income protection, but that's not going to happen. So if you hear the word disability insurance in your brain, you should think not disability insurance, but income protection. But what I would do is What you really need to know is the person that is showing you this coverage absolutely has a thorough background, understanding, and knowledge of how this works. As I said, it's not complicated, but there can be moving parts just like anything else. There's a lot of
Mhm.
moving parts to it, and it's really good to have somebody that's in this industry and specifically in this industry.
Mhm.
And then what I mean this industry is I don't mean and you know there are people that do all kinds of holistic financial planning that are good disability insurance producers. But
Mhm.
there's really good disability insurance producers out there that focus on income planning protection. And that's what I call
Yes.
it.
Yeah.
That's what they do. First and foremost, because like I said, when was the last time somebody died and then got sick?
Yeah.
You know, you do things in order. You know, your paycheck is probably the most vital thing. It really is your ability to earn an income. I can't think of anything more important other than having your health. And
Yeah.
that's where we go back to being young most of the time. And we will touch on this for 1 second. Being young, most likely you are healthy enough to just get a regular good income protection plan. And number two is you have the ability to lock in your health, which we haven't really discussed, for the entire rest of your working career.
Mhm.
There are things, and that's things that people skip too. You can get what's known as a future increase option. And just like a life insurance, you can have future insurability by only having to show how much money you currently earn. Because if you went from, let's use a resident that goes from making maybe 80,000 a year, and you know better than I, they may sign a contract for 250.
Mhm.
You know what? They only had so much at the 80,000. We'll call it $3,000 a month. At 250, they might be eligible for 8,000, $9,000 a month, $10,000 a
Yeah.
month.
And if they've had any change,
Anything in between,
yep. Yep.
they could have to re-underwrite. If you get a policy, I think the most important feature, and not besides on occupation, I think that's important, but I think your insurability is the
Mhm.
most
Absolutely.
important item you can have.
Because yeah,
And
you want to get the policy when you're young and healthy. That's what you have in your 30s. Your 40s and 50s is when things start to break down and you might actually need to file a claim. That's typically what happens.
I mean, I even go so far as to tell young people because I have a lot of friends that have children that are, well, the age of your children. They're adults now.
Yeah.
They're adults and they're going out in the world. And I've talked to an awful lot of parents and said the best thing you can do for your son or your daughter right now in the start of their career is buy them a small income protection plan, a disability insurance plan, um, for a birthday, for a holiday, for anything.
Hmm.
They can start paying for it when they make more money, but you lock in their insurability for the rest of their working career because 15 years from now, when you're a grandparent and they got 4-year-old kids, you still don't know what the health of that child's going to be, and something could happen.
Yes.
We we just, unfortunately, I don't know the actor. We just saw somebody with 6 children.
James Vanderbeek.
They see you do know.
Yes.
I
Yeah.
dated myself. I'm sorry, but
Yeah.
with
That was
six
really sad.
was
Yeah.
it's extremely sad, but nobody has the crystal ball. And you've heard me say that 1,000 times. If you haven't, share
Mhm.
it with me because you just don't know what's going to happen.
Yeah.
And a GoFundMe is not the way to take care of your family. I love
No.
GoFundMe. I think it's awesome that people have the generosity and the kindness to donate to other people that have peril and plight in their life at a certain time. But it's our responsibility to take care of ourselves if you're just single and our families. And this
Hmm.
is one of the best ways that you can possibly do it. One of
Yeah.
the best ways. And with that insurability, you make that 300 a year, you now have something just in case,
Yeah.
because that's what this really is. This is an insurance that's exactly like homeowners insurance. And what I mean by that is you do not pay for homeowners insurance your entire life to pray your house burns down. That would be
Of
silly.
course.
And
Absolutely.
that's what
But if
this
it
is.
does, you think you're lucky stars that you had the right coverage.
And that's exactly what this is. This is the kind of insurance that if you can write your last check and then at 65, the policy goes away and you never needed to use it, I would say you had a wonderful life so far, at least
Yeah.
from that perspective.
And
But if you
at
needed
least
it,
you had the peace of mind all of your
always.
working years. Yeah.
But if you needed it, it takes care of an awful lot of problems. It takes care
Yeah.
of most of your problems.
Financial
That's why I
problems.
think
Yeah.
lack of awareness is the biggest thing. I just don't think people are familiar with income protection planning.
Yeah. Well, thank you, Mike. Thanks for coming on. I really appreciate all of your wealth of knowledge and all your examples. So thanks for being here.
Well, thanks for having me. I really appreciate it. Look forward to seeing you this summer.
All right, sounds good. Bye bye.
Thanks.